CPI-U is now released. That's the inflation that's released, which means we got the 6 months of data. We can look at the I-bond inflation rate for November of 2024. So let's take a look here, do some math, and find out what is this going to be. All right, let me share this screen here. Go ahead and ask any questions in the chat while we're at it. Hey, there we go. Let's take a look at Consumer Price Index release, just released Thursday, October 10th here. And what we're looking for is CPI-U, but we're looking for the exact number. A lot of times they just put the seasonally adjusted. Here we are. Not seasonally adjusted. CPI-U increased 2.4%. I guess they were hoping, the economists were hoping and thinking 2.3%. So the headlines say coming in hot. I don't know if 2.4 is different than 2.3, terribly too much. But let's plug that into our calculations here. I plugged in the 2.3 projection. So here's the number, 3.15 on that. And let's get it where you can see it. There you go, 3.15. And I've got the numbers ready to go. Let's unhide this. All right, so that difference, 3.15, 301 is 0.95. That's the difference between September and March. So doubling that goes to 1.90. The fixed, we'll talk about that maybe in a little bit. I think the fixed might go down to 1.2, but a composite rate of 3.11, much lower than the 4.28. So we're expecting a full percentage point drop in the I-bonds that are issued in November compared to the ones issued right now in October. And you've got it until the end of October. Actually, you've got just before the end of October. What day is it? It's October 10th. So October 31 is 3 weeks from now. Yeah, so Wednesday, October 30th is your last chance to buy the 4.28 I-bonds. Since the inflation rate is going down by 1 full percentage point, the fixed rate is expected to go down, I think, by just a little bit. But hey, let's see what happens if it doesn't go down at all. Even then, 3.21, if it's still a full percentage point drop. So if you're looking to buy I-bonds, buying in October will give you that first 6 months of 4.28 before it then drops the second 6 months by a full percentage point. So take a look. If you've already got I-bonds, that fixed rate, especially now in October, of 1.3%, because you know what it is. Don't know what it will be in November. Might go down to 1.2. That's my thought. I've been looking at some projections. You got to look at the real yields that are out there. David Enna from TipsWatch has a projection that if you take a look at 65% of the average of the real yields, then that'll give you a thought. Well, that's 1.23 right now. I got a feeling they'd probably round down instead of round up, especially because if you look at it, back in May, when they gave us this current fixed rate of 1.3, the May average for these real yields was over 2. Well, the 30-day average, the last 30 days itself, is down at 1.5, 1.6, so lower by a significant amount compared to last May. So it's looking as if the I-bond fixed rates are heading down to 1.2. Don't know for sure. What you do know is that if you buy I-bonds in October, you get 4.28 for 6 months. More importantly, I think, is you get the 1.3% fixed rate, which is a 17-year high. That's the highest it's been for quite some time. And it does look, well, we know for sure the inflation rate's dropping down to 1.9, and it's very likely that the fixed rate is dropping to 1.2%. You enjoy the rest of your day, and we'll talk to you soon.